Get ready for a financial tidal wave heading towards the crypto market, bringing tens of billions of dollars. While this might sound like a crypto dream come true, there's a dark cloud of concern looming. The risk of a complete monopoly. But fear not, there's a silver lining, a way to safeguard our beloved decentralization and anonymity. Stick around, because in this video, we unveil the solution that could reshape the future of the crypto market. Let's embark on this journey together and secure the essence of our digital currency revolution. Disclaimer: the potential approval of a spot Bitcoin ETF in the United States is generating anticipation, with analysts predicting a substantial impact on the available Bitcoin supply. If approved, the ETF could attract an estimated $30 billion in fresh cash, a significant sum even by traditional financial standards, potentially leading to increased demand and influencing the overall cryptocurrency market. Imagine $30 billion as a vast ocean of cash. It's an astronomical amount, equivalent to the GDP of some smaller countries. To put it in perspective, it's more than the net worth of some of the wealthiest individuals globally. If we were to stack $30 billion in $1 bills, the pile would reach beyond the International Space Station. This financial influx into Bitcoin, estimated with the potential approval of a spot Bitcoin ETF, is like pouring a tidal wave of money into the cryptocurrency market, potentially reshaping its landscape and dynamics. This development raises questions about the potential consequences for Bitcoin's scarcity and market dynamics. In this tweet, the expert draws a compelling parallel between the potential approval of a spot Bitcoin ETF and the historic gold ETF approval that triggered an extraordinary 8-year bull run for gold. This comparison is remarkable because the gold market experienced substantial growth and increased investor interest for nearly a decade after the introduction of its ETF. The question raised is whether history could repeat itself in the cryptocurrency realm, suggesting that if a Bitcoin ETF is approved, it might set off a prolonged period of significant price appreciation and heightened attention, similar to what occurred with gold. It leaves us wondering whether the crypto market is on the brink of a transformative and sustained surge, echoing the past success of precious metals. However, this comparison also sparks concerns. The notion is that, just like in the gold market, the approval of a Bitcoin ETF could attract substantial institutional investment, potentially leading to a scenario where a company or government might attempt to buy up a significant portion of the available Bitcoin. The fear here is that such an entity, by accumulating a vast majority of Bitcoin, could wield disproportionate influence and potentially create a monopoly. The decentralized and capped nature of Bitcoin's supply is seen as a safeguard against this, but the question remains whether there are practical limitations to prevent a single entity from dominating the market, raising intriguing concerns about the potential dynamics of a rapidly evolving cryptocurrency landscape. However, buying as much Bitcoin as possible would likely get tricky for anyone. Several industry executives and analysts agree. Valkyrie CEO, the company that has also submitted requests to approve their Bitcoin ETF, states, "Theoretically, a company or government could attempt to buy a significant amount of Bitcoin, but acquiring all Bitcoin in circulation is highly impractical, and we still have a significant unreleased supply of Bitcoin." She noted that Bitcoin's supply is capped at 21 million coins, from which 1.4 million Bitcoins are yet to be mined. She added, "Bitcoin's decentralized nature and the fact that many holders might refuse to sell at any price create a natural barrier against monopoly." The statement underscores the resilience of Bitcoin against monopolization. Bitcoin's decentralized nature means it operates without a central authority, preventing any single entity from controlling the entire market. Additionally, the refusal of many Bitcoin holders to sell their holdings, even at high prices, acts as a natural defense mechanism. This collective commitment to holding on to Bitcoin makes it challenging for any entity, be it a company or government, to amass a monopoly over the cryptocurrency. Essentially, the diversity of Bitcoin ownership and the commitment of holders contribute to maintaining a decentralized and resistant system against potential monopolistic control. The scarcity principle, a well-established economic concept, suggests that the price of a scarce commodity will rise to meet demand. In the context of Bitcoin, attempts to monopolize or buy up a significant portion would trigger a surge in demand. As more entities try to acquire Bitcoin, the limited supply, capped at 21 million coins, would result in an increase in price. Reluctance among holders to sell at lower prices further intensifies this effect, creating a self-reinforcing cycle where the more someone tries to corner the market, the higher the price climbs. For crypto enthusiasts, the potential approval of a spot Bitcoin ETF and the associated bullish news are akin to a beacon of optimism. The idea that attempts to corner the market could drive up Bitcoin prices reflects a collective belief in the inherent value and potential of the cryptocurrency. This news is not just about the immediate impact on prices. It signifies growing institutional interest and acceptance of Bitcoin within the traditional financial landscape. The prospect of a sustained bull run, influenced by increased demand and recognition, fosters a sense of validation for crypto enthusiasts who have long championed the disruptive and transformative potential of digital currencies. It's seen as a moment that could further establish Bitcoin as a legitimate and influential player in the broader financial markets, fueling excitement and optimism among the crypto community. However, it is believed that ETFs are dollar derivatives rather than directly focusing on cryptocurrencies. This perspective emphasizes the underlying financial nature of these investment instruments. According to this viewpoint, the focus of ETF issuers is on making profits in dollars rather than deeply understanding or investing in the actual cryptocurrencies. This perspective shapes the role of ETFs for beginners by portraying them as financial instruments that allow people to invest in and speculate on cryptocurrency prices, but in a way that's familiar, using traditional dollars. It's like a bridge between the world of cryptocurrencies and regular money, making it easier for someone new to finance to participate in the crypto market without directly dealing with the complexities of digital assets. Essentially, ETFs become a more accessible entry point for those who may be less familiar with the intricacies of cryptocurrencies, but still want to benefit from their potential value. But here's something we need to understand. Industry experts hold varying views on the potential impact of successful Bitcoin ETFs. Some, like Arthur Hayes, co-founder of BitMEX, a prominent crypto exchange, express a more cautious stance, suggesting that successful ETFs could completely destroy Bitcoin. The concern here is that increased institutional involvement and speculative trading through ETFs might compromise the decentralized and independent nature of Bitcoin, potentially leading to unforeseen consequences and volatility. On the other hand, some experts believe that the impact of ETFs on Bitcoin may be more limited. They argue that while ETFs can bring significant attention and capital into the market, the fundamental principles of Bitcoin, such as its capped supply and decentralized nature, act as inherent safeguards. This perspective implies that, despite potential short-term fluctuations, Bitcoin's core features will prevail, preventing any outright destruction. The divergence in these viewpoints reflects a broader debate within the cryptocurrency community about how traditional financial instruments, like ETFs, might influence the ethos and stability of decentralized digital assets. While some emphasize potential risks, others maintain confidence in the resilience of Bitcoin's foundational principles. The ongoing discussion underscores the complex interplay between traditional finance and the unique characteristics of cryptocurrencies in a rapidly evolving financial landscape. The approval and widespread adoption of Bitcoin ETFs come with several potential risks and concerns that have sparked debates within the financial and cryptocurrency communities. Regulatory challenges pose a significant issue, as the complex nature of cryptocurrencies requires clear guidelines and oversight to prevent misuse or fraudulent activities. The absence of robust regulatory frameworks may expose investors to unforeseen risks, potentially affecting market stability. Market manipulation concerns also loom large. The influx of institutional capital through ETFs could increase the susceptibility of the market to manipulative practices, as seen in traditional financial markets. The fear is that large-scale investors may exploit the relatively small and still maturing crypto market, leading to artificial price movements and volatility. Moreover, the overall impact on the crypto ecosystem is a point of contention. Some argue that widespread adoption of Bitcoin ETFs may compromise the decentralization and independence that are fundamental to cryptocurrencies. Increased integration with traditional financial systems might expose digital assets to systemic risks and regulatory pressures, potentially altering their original ethos. Additionally, there are worries about the potential for a herd mentality among investors. If a Bitcoin ETF gains massive popularity, a rush of investors into the market may occur, driving prices to unsustainable levels and creating a speculative bubble. The burst of such a bubble could lead to substantial losses for investors and tarnish the reputation of the broader cryptocurrency space. In navigating these concerns, striking a balance between regulatory oversight and the principles of decentralization remains a crucial challenge. The evolution of Bitcoin ETFs and their impact on the crypto ecosystem will likely require ongoing dialogue and adaptation to ensure the sustainable growth and stability of the cryptocurrency market. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.